So here's something you won't hear many people say on YouTube. I lost money. I lost a couple hundo, a couple $100.
Le who? The her.
I'm not scared. I'm not panicked. That's not because I'm a boss. It's because that's the reality of the situation. Sometimes we lose money when we invest, and especially when we trade options. I don't know anybody that's been trading options for any amount of time that has not lost in a trade. Guys, options trading has a low probability of profit. That's why a majority of my net worth is in boring old index funds. And, I do like to trade options for sport and hobby. Sometimes I get burned. And right now, I'm amidst a poor man's covered call that is not going my way. It was not going my way, and I got greedy and tried to rush into fixing it, which then snowballed into even more disaster. So today I'm left 3 days from expiration with a covered call on a Leaps option that I think as of yesterday was down about $200. It was in the money by about $2. So I want to show you exactly my mindset and what I'm going to be thinking about today going into Thursday, the day before expiration. Now, it is early in the morning on Wednesday.
Mike. What day is it, Mike?
So I do have some time to figure this out. I do not know if the markets are going to be green or red today. And I don't know if I'm actually going to be making the moves I'm going to talk about yet. But I just wanted to show you like a couple days out what you should start to think about if things are not going your way with options. So this all comes back to knowing how to close options and knowing all of your possible incomes. Too many people still, to this day, are trading options and they don't even know how to get out of them. I see it in the comments every single day. Guys, you must know every single way you can get out of an option if you need to mitigate loss and also to collect profits if things go your way well before you ever thought they did. I'll leave a link to closing options down in the descriptions below. And I also just released an hour and 45-minute chaptered video on trading options from scratch. So I'll leave that down. You could check that out if this is all foreign to you. But like I said, poor man's covered call. Got some covered calls, screwed up. Let's dive in and check out exactly what's going on. All right, so here we are inside Robinhood, guys. If you are new to this channel, I trade options on Robinhood. It's really all I use Robinhood for. I love it for that reason. It's got a really awesome interface. And those of you that have been around know that this is where I trade options. So in here, you'll see only options plays and then some free shares. Hey guys, thanks for signing up. If you want a free share yourself, get down in the description, sign up for Robinhood. If you're not in Robinhood already and trading options, you must have some real hatred for them. And oh yeah, I got a little Dogecoin, Doge to the moon. I dabbled back then. I'm up 21 cents. I'm not too bad on that. So here we go. At the bottom, you'll see all my buy options, and Robinhood sorts them by expiration. So I have Leaps options on Apple, Pepsi, Tattooed Chef, Starbucks, and then 2 Vuzi plays currently right now. Guys, I update these in real time inside my Discord. If you want to dive into that Discord and see when I'm opening and closing and also the follow-up to this, I'll leave a link down in the description below for Patreon. If you're curious how I'm doing over the last little bit, week I'm up 2%. I am up 3.9% over the last month. The last 3 months down. The last year though, let's go. Up still over 100% returns for the last 365 days. And guys, what you will see is everything's pretty boxy. This may not look what your graph looks like. And that's because options premiums do not update on Robinhood overnight. So once the market closes, the share price will still fluctuate for a stock, but the options premiums, the value of those options will not change. So this is why everything I say today we're going to take with a grain of salt, because it's not going to update the premium value of the options until 9:30. So if you're new to options, don't look at the values during off hours. They're going to be wacky and the numbers are not going to line up. So the issue at hand here is with Apple. Let's talk about exactly what's happened with Apple. I pretty much bought a Leaps option on Apple in February. All right, right when things were going grand before this whole tech sell-off, essentially a sell-off for everything. And guys, this Leaps option cost me, as you can see, $2,170, and I made it for an expiration of September. That was really what I could afford, and the break even on that is $146.70. Essentially my strike price plus what I paid for an average cost per share of $21.70. Now, we know that my goal is not to exercise this option. My goal is to sell this option about 30 to 45 days out before theta starts to take over. But as we can see, it started great and it immediately just dove. It got to a point where this was only worth $805 and I was at a pretty big loss. So you can see right now my total return, and what this total return means is what the value of the option is as compared to when I bought it is $977. Not that grand. We can see that yesterday we had a good day. It was up 11% because Apple's been on a little bit of a move. Okay, if you're curious, let's see. So yeah, this was on February 5th I did this. The Greeks currently, they've changed obviously, so that doesn't make much sense. Now, this was designed specifically for the covered call, but what happened was when the price of Apple, let's just go to Apple February 8th. So if I go back to February 8th, January, February, we could see it was pretty much right at its high. So it was about $136. So I said, if it continues to go like this and I can get it for $21 a share, if I wanted to exercise it, which I don't, then I'd be good to go. Okay, but then after that, we had a little dip. The value started to come up. I'm like, dope, here we go. Now what happened is this. Now I track all of my poor man's covered calls. So I have like a general rule of thumb when it comes to the poor man covered call, which yes, I broke it. All right. So in this case, we're going to do as I do, not as I say. The difference in your strikes is really, really important. The difference between your long call and your short call strikes, that should not be closer than the premium you paid. Okay. So for example, these are my short call strikes. I have $125. That makes my break even $143. I should not be selling short calls for less than $143. Now this will adjust as premium comes in. You can see I'm doing very, very well with Vuzi. My break even $7.83, and that still has room to run. But I got greedy. I was like, I had that itch. I wanted to trade. And this is what happens to us as options traders. We have to feel like we need to be in the action. I'm in my Discord. Everyone's trading options. I had to get in. And I sold one for $132. Now I know, because of another rule of thumb that I have, I know that when I bought this short call, the delta on this option was less than 0.2. It was 0.15. All right. So it was really, really favorable in my direction. All right. So I did all the things that I could do except for taking a major risk. Now, if I get assigned on this option, Robinhood is going to exercise my long call and use that long call to pay my assignment on my short call. That difference is going to net me minus $1,147 if I let that short call get assigned. So now let's look at the short call and realize when we are trading poor man's covered calls, you must protect that long option. This is going to go up in price. The long call is going to go up in price much faster than you can get hurt by the short call. So we're going to take a loss on that short call sometimes to protect the leaps option and protect the intrinsic and extrinsic future of our long call, hoping that it'll profit more. Now, another thing is, yes, we are going to sell to close, but we can open a new short call, probably up and out, and get some of that money back in premium. That's kind of what I'm going to be thinking at. So let's take a look at the short call now. So here's a short call right now. I'm down, right? And when I say it's down, guys, let's look at this value chart. If we look at the week, it's going up and up and up and up. Guys, what this total return means, I don't have to pay this out of pocket, right? This is just the difference in the value of our options. So many people get freaked out like, wait, I thought I collect the premium and then it expires worthless. Yeah, if this expires worthless, I'm going to lose the shares, but I'm going to lose that whole option. What this means is for me to buy it back, I need to look at the current value. And if I buy it to close right now, that's going to be my total return. Your total return kicks in when you buy to close. Now, the value of this option yesterday just climbed, right? So that's what stemmed me to do this video. If your option is climbing, it was staying pretty steady. That was awesome. I was waiting for theta to take hold. It was going to be great. When we sell calls, we want the value to go down so we can buy to close them for less. So right now, I'm looking at a $195 loss. So what I need to do is I need to look at the options chain and see what my possible options are. So I'm going to look at the options chain, guys, and remember, this is just like me getting an idea because we are not in market hours, so those options will not be the same. So view all options. Okay, so we can see right here, here is my short call. It's very in the money. Scenario one, we open the markets on Thursday. The whole world is in the red, like it's been for the last month. This thing drops down to 132, right at the money. Hopefully what that's going to do is drop the value down. And to be honest, I'll probably close it anyway, right? I don't know if I'm going to want to deal with this. As we get close to expiration, liquidity goes down. Right now, I'm pretty much planning on closing this at a loss unless like the markets just dive when they open on Wednesday and then they continue to do so on Thursday. Here was yesterday's value at close, the 231. Like I said, I'm at a loss of 195 because I got a credit when I got that. So I'm going to be thinking about trying to recoup $195. And I also want to make sure this time that I don't burn myself and I look at the 143 break even price. But here's why I got greedy. If we go up to 143, we would see that I'm getting $1. Even if we go out a week to July 2nd and I go up to 143, I'm going to get $8. If I go out to July 9th and look at my break even, we start to see my break even, and probably what I should have done is been a little bit more patient and gone a little bit out in expiration, maybe taken less of premium, and then not got myself caught in this silly situation. Right now, that's a 0.07. So let's see if I even go out a little bit more. July 16th, that 143 right now, that's at a pretty nice delta. See, the deltas don't match up, right? The deltas don't match up because we're outside of market hours. But essentially, I'm full disclosure, guys. I'm probably going to risk it again. I know you can roast me in the comments. Like I said, this is a do as I say, not as I do. I'm probably going to just look for, I'm probably going to look about 2 weeks out in this July 2nd or July 9th. What I'm going to be patient because 4th of July is coming. I don't want to look at any options. I do not want to be dealing with this during 4th of July. I am going to come down and find pretty much what a delta is going to be in that lower than 0.2 range. So I'm not good there. Not good there. I'm right there. So in my 139 to 140 range is probably where I'm going to look. Now, if these numbers were accurate right now, we would see that I would lose 195 to close. I would get 60 back. I would really only lose 130, but technically I saved myself from losing $1,100. That's why I really need to close this. I will close this at a $200 loss to protect that $1,100 and know that I'm a donkey and know that I just need to make it up before September. I need to do this process to get myself and my head back over water. So as things look right now, this is probably what I'm going to end up doing. I'll probably be in this 139 to 140 range for 2 weeks out. I'm not going to get all my 195 back. I'll get some of it back, and that will be that. Guys, you're going to lose. You're going to lose money on options. Anybody that tells you that they've won on every option is either trying to sell you a dumb course, which you can get for free right down in my comment section, or they're just flat out lying to you. All right? So I hope this helped. Hope if you're freaking out about an option, you're feeling okay now. And until I see you guys in the next one, stay positive. Work really hard. Always, please, I beg you, please, please, please. You know what it is. Be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.